Triple D, Dennis, and I have been trading, investing for decades, doing the show for quite a long time, and we've seen a lot of changes in the markets, especially in the top components in the S&P 500 index. ExxonMobil maybe was up there. General Electric was up there. Apple had to purge for a long time. Nvidia, Microsoft snuck in there. But we got a new kid on the block moving up fast, and it's AI related. Google taking over the market. Many implications to discuss. We'll throw in some earnings reports. We'll talk to Michael Hewson from across the pond. And we got some economic data. They're throwing economic data at us now. With no further ado, let's get pre-market prep started.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right, did I fail to mention a Ukraine peace deal? Oh, man, what a morning. We're flat with all the news and everything flat. Nice move yesterday. Nice two-day move at 67.22. The buck hanging out at par, just right there, just down a few pennies. TLT perking up 26 cents, over $90. Nice rally, 90.27. USO continues to wither, down $1.47, 68.95. GLD, nice day yesterday, just about flat today. Silver's flat too. Good question in the STN room, like, why isn't Bitcoin participating? Well, we'll have to figure that out in today's show. We're down about $1,700. The futures, 87,520. These charts are brought to you by TradeStation, a proud sponsor of the pre-market prep show. We're going to be learning a lot more about the TradeStation charts. And I want to know who your TradeStation users are. If you're a TradeStation user and you're in the chat, send me an email. Joel@StockTraderNetwork.com. I'd like to talk to you. Let's bring on Triple D. Triple D is going to give us a dissertation on GPUs versus TPUs.
I mean, that's the story of the day. I'm not the person to do that. We do have an email out to Joel Kalina. We're trying to bring him in. But this is the story of the day. So, Brentster, come on in here and you can break the news for us, and we'll try to do our best of breaking this down. But this is the story of the morning is Google versus Nvidia and GPUs versus TPUs. So what happened last night?
So we were watching Nvidia shares moving lower last night. A little bit later, we found an information report, the information saying that Meta is in talks with Google to use Google's TPUs in 2027. TPUs stands for Tensor Processing Units. A little different than graphic processing units. Did Google shares move on this? Did Meta shares move on this? Did Nvidia shares move on this?
Absolutely. This is the story of the day. We'll get Joel's charts up here, add those to the screen, because this is your story of the day. Huge move up lately in Google. So let's just break it down. So basically, TPUs, to my understanding, are hardware built by Google specifically for machine learning. And GPUs are obviously being built by Nvidia, AMD as well. So what you have here is two different, applications here that are two different, hardware that, is for different applications. So we've been kind of using, the market's been kind of using GPUs for everything. At this point, TPUs look like serious competition now, especially after the Meta report last night for GPUs. So, and again, remember, I'm not a technical guy here. I'm a stock trader. So if I mess this up, let me know. But, just trying to sum it up. So right now we have, this Google versus Nvidia. And it looks like Google is going to start eating some of Nvidia's lunch. I mean, Google is just firing on every cylinder possible here since Warren bought it. And I mean, we can give, Greg Abel here. We should start going on the new guy. He's actually got a name. I believe it was his pick. We don't know that for certain, but it's kind of, if this was his new pick, it was a hell of a first pick because this has been an incredible run here for Google since Warren Buffett bought it. So we're looking, 278, and we know he would have bought somewhere between August, September, October. Well, actually, before that, it would have been back in August. So we know he could have bought this as low as $200. So they would be up substantially on Google before it, and it looks like a genius purchase here. I mean, I don't know what this means long term. We have seen this happen before with DeepSeek. Remember the DeepSeek day where it came out, they tanked Nvidia. They're like, oh my gosh, we've got competition here for ChatGPT. We've got competition for Nvidia, and coming from China, and they killed all the AI stocks. Those ended up being buys. At this point in time, now we know the AI spend has been nothing short of incredible for Nvidia. Any kind of decline or any kind of pullback from that spend is going to be real bad news for Nvidia and AMD. So that's where we are here this morning. We're asking if this is a changing of the guard. Is Google going to be coming in because these TPUs apparently are cheaper? They can apparently just use them on the Google platform. I mean, there's a lot of considerations here. And we know also is that market has been rewarding huge AI spend lately. They've been concerned about it, if anything.
Opposite.
They've been concerned about it with Oracle, like Oracle leading the charge down because they're concerned about the excessive AI spend. So the question is, do other companies start doing the same thing and looking more to Google's TPUs as opposed to NVIDIA's GPUs? If that is the case, that's a scary thought process for Google, or a scary thought process for NVIDIA, and a great thought process for Google. I mean, when you look at valuations here, and even though Google has been on a hell of a run, it's still only trading at 28 times forward earnings. And it's run up a lot. NVIDIA is trading, well, they've got a 24, but that's going to change. So let's go. I hate looking at trailing P, but it's 45 and on NVIDIA and 31 on Google. There's so many considerations here, and it's definitely above my pay grade to try to say that, yeah, everybody's going to pull a Meta and now start focusing on Google's TPUs. I don't know if that's the case. But right now, the market is very concerned that it's a possibility. And that is why they're relentlessly buying Google, and they're relentlessly selling NVIDIA and AMD here this morning. NVIDIA is now down 4%, down 7 points. AMD
big divergence, 7%. Huge divergence there. I mean, huge. There's an 8% divergence between NVIDIA and Google, and there's other players. There's Broadcom. I'm like, yes. I'm looking at this thing yesterday, and I'm like, okay, no one ever told me about the Broadcom Google trick. That's a new one. Broadcom is betting, and then Meta is getting involved in this too. So, it goes far. I mean, definitely Google, Nvidia, but you got to look at Meta. You got to look at Broadcom, and then AMD is in the red. Where does this put Oracle? This throws such a monkey wrench into the whole AI scenario. And I'll tell you right now, DeepSeek was DeepSeek, okay? And whatever how we reacted to this, I'm not gonna mess with Google on this one. I'm not talking about the particular price action and anything, but they were slow to the game. They were barred. They were this. They were that.
That was the thing, Joel, and that's what scared me the most back when Bard came out, or Baird, or I think it's Bard, and it was terrible. And they asked it a question and got the answer wrong, and then Google tanked. Remember, it was tanking on that. Yep. Everybody was like, Google's done. Google's done. And, I was scared too. I was like, if this search is 56% of the revenue, and I'm like, all of a sudden, if nobody's searching anything, that's a scary concept. It appears that Google has found their solution, though. It appears that Google has, now, again, the geniuses of Google have reinvented the wheel once again here and come up with something that can compete with NVIDIA. This is, not necessarily a changing of the guard, but competition for NVIDIA for sure. So you've got a separation here happening with certain stocks. So some benefiting from this, like you just said, Google, obviously, maybe Meta's going to be on the side, but they're the end user. But Broadcom, which obviously is a supplier to Google, AVGO up substantially. And then you have on the other side, NVIDIA, AMD, SMCI, could go Coherent, COHR, which is from Joel Kalina's note. There's, a number of winners and a number of losers here. And lots to consider here. So you're trying to, and Joel's here right now. This is a fantastic time, actually. So we got Joel Kalina in the background here right now. We just sent him an email to see if he could come on quickly just to explain the differences here, because he's going to know the technical stuff much better than we are. He's just getting his camera ready. So obviously
no camera, just audio.
Well, that's fine. Let's bring him in. So
right,
we got voice. Let's bring him in.
Joel Kalina, Wedbush Securities.
Morning, guys. Can you hear me okay?
We can hear you. We can hear you fine. I just want to say thank you so much for hopping on. There's a lot to digest here. We got a lot from your note. We want to get your take hot off the press.
Yeah, I mean, it's here we are, right? 2025. There's not a day that goes by where there's not something new, and I'm waiting for this story to be kind of denied in about 8 hours time. But for now, we'll exhaust all our energy and attention on it. Again, I think this is so obviously that you guys, I'm sure touched on it, but the headline that Meta is going to start testing some Google trained chips as well to kind of reduce their reliance on Nvidia. And to me, the most important part of this is it could just be in the early stages of exploring another path outside of Nvidia, but the key is at some point hyperscalers, sovereigns, they're going to seek cheaper alternatives to GPUs, and that's where Nvidia has been so dominant. Obviously AMD's in the second pole position there, but if you look at Meta's stock price, which I'm sure a lot of your listeners have, the stock has just been toxic since its print.
Yes.
And for a while Zuckerberg got a pass on all his freewheeling spending. And stock charts across the tech world are telling you, well, investor sentiment has shifted. If not just looking at not just Meta, but really concentrated in the internet space, whether it's been Roblox, been Uber, been DoorDash, stories with elevated spend attached to them, multiple has been compressed pretty aggressively. But shifting back to this story, it's a game changer. I've been a big fan of Google, coming out of their developers conference back in May. I think a lot of people were on the sidelines until we got the DOJ ruling, which came right after Labor Day, and here we are. Stock just continues to re-rate to the upside. There's multiple parts to the story that are fueling this multiple expansion. But again, you have Nvidia down 4.5%, and even more aggressively, AMD down 6%. And why I want to be careful here is, people were bulled up about AMD in 26 and beyond. Meta was supposed to be their big customer for the MI450 chip. So how does this impact their relationship with Meta, beyond? And again, I think people were frustrated with Zuckerberg. They want more kind of visibility and really just more monetization around their AI spending. And this is one solution to that, right? We're going to be seeking cheaper alternatives, try to get the OPEX and CapEx down a little bit. And then they can kind of get the flywheel going. But it's a big story if it's not denied in the next day or two, but it's something to keep an eye on.
Denied in the next day or two. I mean, the information is coming from the information.
Yep.
You are familiar with a lot of news sources and everything. Where do you rank it? The reaction in the market, we've seen these things before. Right now, credibility is the price action shows credibility on the side of the information.
Yeah, no, I was sort of I'm sorry, half joking with that. Information has leaned a lot more negative over the past several months for whatever reason. And I don't necessarily think they've been wrong. Like, I think they're, actually was on a different media outlet, I believe Friday morning, and I didn't say it correctly, but I was pretty much trying to say there can be two truths at the same time, i.e. a company like Google and their TPU momentum could be, just going gangbusters to the upside, and the AI boom could still be underway. But on the other side, you can have real concerns around Sam Altman and the commitments that OpenAI has been putting out there. The math is challenging. That's what David Einhorn, he said it about a month ago. When you're looking at all these contracts, these commitments, the math is very challenging when a company is generating $15 to $20 billion in revenue. And who knows, history will be the judge of it. But when Altman was on Brad Gerstner podcast, I guess 4 or 5 weeks, it was actually November, late October, right around Halloween. And his reaction to a simple question, people were comparing it to Enron's Jeff Skilling on a Q&A, 2 decades ago. Now, it's too premature to lay that out, But then you had the CFO kept on coming out of OpenAI saying all these odd things about government support. CHIPS Act should be expanded to cover data center build out. And then she was saying, well, near-term metrics are slowing, but we expect user growth to accelerate into year-end as we roll out more adult content. Like this is where we're ending up in 2025. OpenAI essentially just opening up to porn and erotica to kind of shift the metrics that have been going the wrong way. So I think you see the Gemini 3 rollout, and now you're having this TPU momentum building. I think now it makes sense why there's been some lot of weird mixed messaging from the OpenAI team in the recent weeks.
I mean, if we do get more spending on Google's TPUs over Nvidia's GPUs, there is clear winners and losers here. Obviously, as Nvidia is a loser and Google's a winner. But can you break down some of the other winners and losers here? Because we see Broadcom trading up substantially here this morning. We also see AMD trading down. We see SMCI trading down. Other stocks trading down as well. Can you break down some of the winners and losers here?
The obvious winners are Broadcom. That stock's up 4% this morning, but it's been on a heck of a run as well. And again, like Hock Tan, and I say this, with respect, the poor man's Jensen, he's a genius. I mean, he's also built a very diversified asset and company over the past decade plus as well. So it's the biggest supply chain beneficiaries are Broadcom, Celestica, and Lumentum. All have had huge moves, but it doesn't mean if you see this continued shift from the hyperscalers and sovereigns seeking cheaper alternatives and more custom ASIC kind of chip accelerators, that those names are going to continue to benefit. And on the flip side, AMD, as I mentioned, Meta is projected to be a big customer. Their new chip that's going to be coming out, Nvidia, Supermicro, the Neo clouds, obviously CoreWeave is very tight relationship with Nvidia. Dell on the server side, so the ripple effect could be great. I don't know all the specs around memory, so I can't really speak to Micron or Hynix, but we know that Nvidia has been trying to secure as much high bandwidth memory as they possibly can. So keep an eye on more Micron, Hynix, and even Samsung to a degree. But yeah, it's like I said, that right now the AI trade, it's sort of we're even seeing increased dispersion within this small group of names, and it's incredible. I mean, it truly is incredible how this year just continues to grind along.
Joel, we can't tell you how much appreciate you coming on the hop like this. I know you're having a busy morning to hop on. Like I said, we really appreciate it. Joel Kalina, he's over there.
This was super easy for me too. So any other, just ping me on email. I can do this for 5 minutes quick anytime.
Awesome.
Okay. All right.
All right, guys. Good luck.
All right.
Thanks, Joel.
Thank you.
I mean, clear winners and losers here. Lots to think about. The question is this another DeepSeek moment, though, where this is a one-off and these stocks are all going to get hit because they're worried about this, and then the competition really isn't, as much as we thought it was going to be, and Nvidia is just another buying opportunity. That's also the question as well. I mean, I'm concerned. I'm long Nvidia. I'm long AMD. I'm long Dell. I'm long all these stocks that he's talking about here. So, obviously you're seeing it substantially lower here this morning, and you're like, man, did not have this on my bingo card a week ago. I don't think anybody did. Obviously, these stocks would, be, but, you look at clear losers that have been happening here, and also just the AI spend. Like, I mean, it's changed completely. Like, they were rewarding AI spend a month and a half ago, and now they're punishing it. So this market is very concerned about excessive spending here, and if Google's got a solution to bring down that excessive spending, that's a problem for Nvidia.
You know what also I think is kind of interesting? Then we can go to some other, we're getting asked about some other stocks. Some big investors pulled the plug on Nvidia over the last couple of weeks. I mean, whatever. I don't know what Barry's doing, but didn't Peter Thiel sell everything? Go 100% flat?
There's always somebody pulling the plug on Nvidia because they're scared of valuation. I mean, the stock's been incredible. So there's always, people willing to, obviously move out. I mean, think about where Nvidia was. It was $13 in 2023. It's $182 yesterday, $175 this morning. I mean, what is that? It's up over 1,000% in 2 years. So, I mean, I'm sitting on it too. It's a huge winner for me. So I'm like, do I ring the register here, or do you just stay the course and say, hey, there's going to be room for everyone? And that might be where I'm at, is like, maybe you're looking at Google on dips. that there's room for everyone here. I don't know. Obviously, I have no crystal ball, but the initial knee-jerk reaction is, oh my gosh, we have competition for Nvidia all of a sudden, and that's not what the market wants.
We were just asked about Micron and Western Digital. I mean, these stocks have had incredible runs, a little bit of negative price reaction.
Well, none more than SanDisk.
I
mean,
right.
In the memory space, like SanDisk has been the most incredible one of them all. So $50, $250 in 2 months. I've never seen SanDisk. I'm gathering that SanDisk may have never had a move like this ever. This memory run has been incredible. And then S&P 500, SanDisk went in there last night, or getting added to it. So SanDisk really popped up to over $250. It's leaked it all back. Micron, to your point, Joel, and Western Digi both trading down here. So while Western Digi it's actually turned back just green, but Micron's down. I don't know. Like he said, he didn't know, and Joel Kalina knows a lot more than I do about the technicals on the technical aspects of who's winners and losers here. And he said he didn't know what this meant for memory. So SanDisk, Western Digi, and Micron obviously memory. But I mean, there's been this ridiculous run up in cost of DRAM. And obviously, Micron been hugely benefiting from that. We have seen big runs in Micron before, none of this magnitude, but it's a cyclical business. So the prices of DRAM go up and down, and up and down, and up and down. And Brentster, you've seen this before. It's usually not the thing to get fooled by a low PE because DRAM prices just exploded. They usually do come back in. So is there a memory shortage? The market thinks so, but there's a lot of things to consider here.
Okay, wow. Well, that was quite a discussion there, and we'll see the implications moving forward. We did have some ADP numbers. This is a really kind of a strange day because we have ADP, and I believe we have PPI at 8:30, Dennis. So wow. we got some data. SEP PPI. I don't know. That could be like a real yawner.
Sure.
But some early. You got a preview of that at all, Dennis or Brent?
Let me get you the ADP numbers here. And so what happened with the ADP numbers is we've been talking a little bit about this on PreMarket Prep and STN, but ADP is going to be giving weekly employment numbers that basically leads up to its monthly ADP employment report. That's the one we've always gotten. That's the one that happens the same week that we get the Bureau of Labor Statistics, jobs data, and the weekly jobless claims. So the data point that we got today was for the 4 weeks ending November 8th to November 8th. So that number, private employees were down about 13,500 jobs each week in that period. So just again, a little disclaimer, this isn't like the normal ADP data. Maybe that's why the market didn't really move on this. I don't have expectations for this because it is that intra-week report. For PPI, we're going to be getting PPI at 8:30 a.m. We are looking for a core reading, which excludes food and energy spaces, up 0.2% on a month-over-month basis. Core reading year over year for the month of September is expected up 2.7%. I'll break in when we get those, but as Joel was saying, this is the reading for September, so this is quite delayed.
This is going to add, fuel to the we're cutting rates next month fire.
Mm-hmm.
So
weak jobs data.
Yes. And obviously PPI is going to be important here in 5 minutes, but the ADP being light probably gives more. We've had multiple Fed officials coming out here saying that, yeah, we're going to be looking to cut rates here. What is the odds here now?
The odds 5 minutes before the ADP data point, it's not updated yet. I'm still about 15 minutes delayed, is at 83% of a Fed rate cut in December, a 25 basis point rate cut in December.
It looks like we're going.
It looks like we're going. I'll get you an updated Fed fund tool when it's after the PPI figure.
I think, we'll see what the PPI is here, but writings on the wall here that we're probably going down again. So that's why you're seeing, and obviously the peace deal, which we didn't even talk about, Ukraine, ABC is reporting that we got a Ukraine peace deal here. So lots to consider. IWM having a nice pop.
Yep. Williams kind of, was it Williams? I can't keep track of all these
I
fat
can't
heads.
either. Williams was a few days ago. That's when
Friday.
the home builders were all going nuts because he was coming
Yep.
out and saying,
Yep.
supporting a rate cut.
And I think, if we have taken Blue's clues over the last 6 months, year, how Blue's been on for a long time, he says once they start, they kind of keep going, right?
Yes.
And so I think we'll see the quarter, and then it will be the, what's the tone? And Paul tried to walk it back when he spoke last time. And that kind of, put a little uneasiness in the market. But whatever he walked back, Williams and I don't know, whatever guy, spoke after Williams kind of got it. So we're up to a higher probability on that Fed rate cut that, the market likes it. Don't fight the Fed. So we're seeing that the TLT has had a little bit of move here since Friday too. Now up over up $90 at 90.33. We'll see. Once again, we got 3 minutes. Should we actually sneak in? An earnings report, or do we want to go to the after hours action in the
Baba?
Baba?
Yeah,
Baba.
They're all asking for Baba. Brentster, if you have the Baba report, let us know here. It's nice
sure.
Stock popping up.
Company reporting 61 cents in earnings. Analysts were looking for just 49 cents. A really nice beat there. Sales, not quite as strong of a beat. 34.8 billion. Analysts were looking for about 34.4 billion. Let me just check for some guidance super quick. I don't think Alibaba normally gives guidance, but let me just double check the press release. No, I don't see any guidance. So it looks like we have just the quarter to go off of here for Alibaba.
It's a nice lift. I actually sold half my stock yesterday because I didn't want to take it through the print. And China stocks have been kind of leaking a lot. So it's been the play to be selling pops on China stocks. I do think it's still cheap. I'm still holding half my size because I just think stock Alibaba is so cheap. But again, we don't know. The geopolitical situation is constantly changing. It seems like tone towards China is constantly changing. We don't know what the next thing is going to be said here. I mean, it's just constant. So it is a pop. Again, if Alibaba was in the U.S., this is a U.S. company, the stock's $300 a share. But it's not. It's in China, and it's always guilty until proven innocent, it feels like, with all China stocks in this market.
Very easy. One number for Dennis is going to be confirmed by 2 charts. The chart on the left is going to give you the pre-market high at 168.80. The chart on the right, the upper right chart, is going to give you the 50-day moving average at 168.78. Let's just respect that level, see if we can get back above it, which we did for such a long time. Look how it just hugged that. It was great support. We got a little bit too far away from it. Now we've had some choppy action. So keep an eye on that. Pre-market high has nice confluence with that 50-day moving average. And we are about 25 seconds away here from the PPI. Let's see what Head has to say about further interest rate cuts.
There we go. 15 seconds.
Again, we are looking for a 0.2% increase on the month-over-month reading for the core reading. We're going to be focused on that core reading in a few seconds here. Let's see what the market does. 8:30. Data. We are standing by for the data, waiting for the data.
Waiting.
We have we do have retail sales out for the month of September, up 0.2%. That was worse than expected versus a 0.4% increase. Worse than expected retail sales. I am still standing by for the PPI figure. PPI coming in year over year up 2.6%. Economists were looking for a 2.7% year over year increase for the core figure. That is a slightly light reading for at least the core PPI figure year over year. I am actually still standing by for the month over month figure. Initial reaction in the market.
Crickets.
Yep. Crickets. Sometimes it's delayed, like reaction, like the algos don't know what to do with inline numbers or slightly light numbers here. So they sit here and they're like, oh, you go, kind of waiting for like an initial response here. I'd say right now crickets is the correct call, though. There's just been not much. September Purdue PPI obviously was in line. I mean, this is as close to in line like on everything. So I don't think there's a lot more new information here. Like nothing to change probably the opinion of Fed officials for the cut next month. I think this probably is.
And when we conclude with our guests, I'll have a little updated CME FedWatch tool number for Fed Fund futures in about 15 minutes or so.
I usually watch the IWM on these because it's more sensitive. So somebody's asking, what do we watch? The futures of the IWM? I typically watch the IWM because those companies that are in the IWM are much more interest rate sensitive. Hasn't moved. IWM is just sitting here, like trying to get direction. So there hasn't been much movement at all.
Trying to get some focus. People are still probably digesting that, that other major news. And I think that that with the Fed tool getting that high up, I mean, I think people are, hunkering down here for that interest rate cut coming up. What the tone will be for the remainder, going into 26. I think that's what everyone is going to be more interested in. We have Michael Hewson in the background here. Do we want to go to him or should we?
Yeah, for sure.
Okay. We are joined by the financial analyst Michael Hewson, who writes a great piece on Substack. A lot going on today, Michael. But how you doing? How you doing across the pond?
Yeah, we're sort of gearing up, Joel, for a budget tomorrow. Though I don't think there are going to be too many surprises in it, given that most of it has pretty much been pre-leaked. We want confirmation of the uncertainty that's, I think, been driving bond markets here, the pound, over the course of the past 6 to 7 weeks. And it appears that 12 months on from the last budget, this government has learned nothing about bolstering business and consumer confidence, because both are pretty much on the floor.
So the general take is the song remains the same on that. Not going to be doing things. I mean, the economy. I mean, they've been kind of going and it been a little bit more accommodative. We have, but it doesn't seem like you're really excited about the new steps coming in.
No, not really. I mean, since 12 months ago, and the last budget, the October budget. The unemployment rate's gone from 4% to 5%. Inflation has gone from 1.7% to 3.8%, peaking at 4%. And the government's wringing its hands and saying, well, why has that happened? Well, take a look in the mirror, guys. Energy prices, food prices, wage increases in the minimum wage, increasing national insurance contributions on businesses. And ask yourself why the cost of living has pretty much gone up significantly more than countries like the US, Germany, France, and pretty much everywhere else. They're blaming everybody but themselves. And to be quite honest, sometimes listening to these politicians, it's like listening to a 6-year student at university. The level of debate is quite shockingly bad.
Michael, what's the sentiment over there? Like you go on the street, are people positive, like, they're feeling good about where we are? Is it like, just talking to people, boots on the ground over there? What's the sentiment over there?
It's pretty poor, if I'm honest with you, Dennis. I mean, people are concerned. They're concerned about the cost of living. They're concerned about what sort of a Christmas they're going to be able to pay for. There was a survey out this morning. Consumer confidence fell at its fastest rate in 7 years. Retail sales in October down 1.1%. It really says it all, because essentially all we've been hearing for the past 6 weeks is they're going to raise taxes on this, or they're going to raise income tax, or they're going to raise national insurance, or they're going to cut savings allowances on on ISAs, independent savings accounts. We've got a government that is looking to fill a 20 to 30 billion black hole 12 months on from raising taxes by £40 billion. and they've been blaming everyone else but themselves for the fact that the black hole that they were trying to fill a year ago is now double the size now, despite the fact that they've raised 40 billion in extra taxes. Unfortunately, they've spent an extra 60 billion on top.
What about your electric bill? What about inflation? How's inflation
Again,
over there?
I mean, inflation is 3.8%. Well, actually, no, it fell to 3.6% in October. So we think it's peaked 3.8% for the last 3 months, and then come down and ever so slightly. But that's the headline number, Joel. Food inflation is 4.9%. It's 2% above where it is in the US, and it largely is a consequence of sky high energy bills. We've got the highest energy bills in the G7. My energy bill on a annual basis for electricity and gas is around about $5,000.
Wow.
Wait, 5,000?
Yeah.
What do you live in? Buckingham Palace?
Wish I did. No, I mean this is just a normal house. You've got
He's doing
gas,
crypto
central
on
heating,
that
and
computer in the
electric.
background. He's mining Bitcoin.
No, the ring light alone probably uses up quite a bit as well. So
why is it so high? Why is the energy bill so high in the UK?
Simply because this government has decided to push for net zero by 2030, which means that there's an awful lot of green levies that have to go on energy bills. We've got solar power, we've got wind power, but unfortunately there's nowhere to store it. So we're actually paying companies to turn wind turbines off, or solar power, sending energy to the grid. The grid needs to be upgraded to be able to store energy so that it can be used at a later date. And ultimately, if there is no wind and there is no sun, then you're faced with the problem of how do you keep the economy ticking over? You have to pay sky high prices for gas and for gas or any other fossil fuel to basically keep the lights on. So what the government is doing is it's allowing gas-powered power stations and nuclear powered stations to be decommissioned, but they don't have a plan for replacing them. So you're faced with the fact that our energy infrastructure is out of date. So we don't have enough energy storage. And what storage we do have is only enough to last, say, 3 or 4 days on a really, really cold day. Otherwise, we then have to import our energy from countries like France and Norway, and obviously buy natural gas from the US or Qatar.
Michael, let's shift to politics here. And you guys are a little bit closer to Ukraine than we are. And we're hearing some rumblings here of a peace deal. What I've heard is like no one liked it at all. Europe was coming in and saying we don't like this, and now we're talking about a deal, basically handwritten by Putin. Where does where does the UK? Where do you stand on the resolution to the Ukraine?
Well, I think this war's gone on nearly 3.5 years, coming on 4 years now. Certainly gone on longer than Russia thought it would. I thought that they would be over within 3 weeks, and it's gone on for over 3 years. So there needs to be a resolution, and no one is going to be happy with whatever resolution there is. Does appear to be a framework of some sort of deal. I think the key thing for me is how the terms are negotiated and how the terms are implemented, and whether or not Russia's feet are held to the fire when it comes to keeping their part of the bargain. Because, whatever your viewpoint, whether you're pro-Russia, pro-Ukraine or whatever, the status quo cannot continue with the attrition rate that we're seeing in terms of loss of life and infrastructure damage.
Awful.
So, as far as I'm concerned, no one is going to get what they want. I think the least worst option is if basically both parties walk away unhappy, but they can sell it to their populations. And I think that for me is probably going to be the best outcome. Whether or not it will happen, there are positive noises. We're certainly seeing it in the context of oil and gas prices. I'm looking at Brent and I'm looking at crude, and they are lower. And that's very welcome news. I think what needs to happen going forward is Putin cannot be seen to be getting away with, in any way, sort of a small win. There has to be a price to pay, because if he's seen to win in any small way, that could prompt actions in Asia when it comes to China's ambitions on Taiwan.
What about the traveler? How is the traveler over in Europe, here in the UK? Like, are they still like going places, doing things? Like, what is the sentiment towards traveling to the US, as well? Because we know back, obviously, when tariff wars were at their peak, we had a lot of, rumblings and nobody's traveling to the US here. Anti-American sentiment was strong. Has that cooled off here, and like, are people starting to, travel again and starting to feel better about, like Americans?
I think there has been a drop off in some transatlantic travel when it comes to Europe and the US. Personally, I've been to the US twice this year, and to my mind, it's always been a welcoming country, irrespective of who's president of the United States. And my view is, if you're putting off going to a country because of who's president, then you're an idiot. You're a moron. Because ultimately, it doesn't change the people there that you interact with on a day-to-day basis. So I've been to the States twice. Obviously, I have family there, but I don't always go and visit family. I go on road trips around your beautiful country. And to my mind, as I say, whoever's president, it doesn't really matter in terms of the welcome that tourists are given in the United States. So for me, it's a no-brainer. I go to the US come what may. Other people who are slightly more politically inclined, maybe it does put them off, but that's their loss, in my view. The US is a great destination, it's a great tourist destination, and for me, it always will be. In terms of European travel, we've had a budget airline this morning post a very decent set of numbers. EasyJet boosted profits in both their holidays business as well as their passenger business. So in terms of going away, people are saving up, they're going away, they're booking later, which means that bookings take a while to get sold out, but ultimately people still are able to scrape enough money to actually go on holiday. It's just that they tend to be later in doing it, shall we say, in booking it.
Have you made it to the Motor City?
I haven't, no.
Well, you get that.
We did drive through Detroit. Well, actually, we went across the Windsor Bridge into Canada. So
Nice.
when we went to visit my sister, she lives in Ohio near Cincinnati. So
that's a 4-letter word. You can't use 4-letter words.
Oh, you didn't like Ohio.
Okay. Michael, before we let you go, what about, heading into the year end here? Let's turn our attention to the US markets. Where we were at in April, what we hit last month, the recent volatility that we've had. There's always news, a decent earnings season. Just looking, nice gains here. Do you think money managers are just kind of like, well, they're buying the dip because we've had some violent dips here over the last couple of weeks, but they're kind of also like selling the rip here. Just, put a bow on the year, maybe where your targets were for the S&P 500 and your sentiment for 2026.
Well, in April, I actually thought that we'd seen the highs for the year in the S&P, so I got that wrong. But on the other hand, I was very bullish on the FTSE 100 here in the UK. I didn't think we'd get to 10,000. I thought we'd get to 9.5. So again, a very good year for both US stocks, UK stocks. Can we sustain that into 2026? I don't see why not. But between now and January, I don't think there's going to be an awful lot of upside. Now, why do I say that? Because if you've made your money this year, you're going to want to bank it. You're going to want to make sure that come year end, you've got a positive P&L. So given the gains that we've seen thus far this year, I think that's why you're seeing the volatility, guys. I think people are worried about hanging on to what they've got, and they're going to be reluctant to push markets significantly higher from here. So potentially, I think we've probably seen the highs for the year, but 2026, as long as we get a rate cut in December or January or whenever, further rate cuts, then I see no reason why stocks can't continue to go higher, barring obviously an unexpected event.
Oh, always unexpected events in this market. We've been joined from across the pond from Michael Hewson. He writes on Substack. You can check that out, substack.com /@ MCA. It's MCH Market Insights. Michael, always fun to have you on, get your
Always a pleasure,
perspectives on the
guys.
markets across
Thank
the
you.
pond. We'll try and sneak you out unless you're doing another long U.S. vacation. Are you going to be working anymore after Thanksgiving?
Oh yeah. I'll be working all the way up until about the 20th of December. So and then I'll be done until the new year.
Okay. All right. Thank you very much.
Cheers, guys. Have a
Michael.
great one. Have a great Thanksgiving.
Thank you. We're just leaking. So we try to hold up. Obviously, ADP data was fine. PPI data was fine. I don't know. When you have Nvidia down 5% almost, AMD down 6.7%, you're like looking at this market and thinking, how are we going to hold up? I mean, these are too big of components here. Apple's in the red, Tesla's in the red, Microsoft's in the red, Amazon's in the red. I mean, can Google do all the heavy lifting here? Probably not. I
Probably
mean, Google's
not.
a huge component, but you got one, Google and AVGO trying to hold up the market. You have everything else going down around it. Value trade could be a little bit in style here with, the thoughts of interest rate cuts coming and, today's data not doing anything to derail that thought process. So I do think you might see a little bit of flight to the value trade here early. Also, retail names could be in focus.
That's what I was going to say.
We do have the biggest retail, obviously Black Friday coming. Sometimes being long retail stocks ahead of Black Friday is a good idea.
Yeah.
Apparently being long retail stocks in the earnings reports last night was a good idea here too, because we got to go both Kohl's and ANF. If you want to jump in there and give us those reports
Sure.
here, Brent, we'll cover them.
Sure. Go with the Coles to start it off.
Sure.
Joel just had to go check on his dog going crazy upstairs.
Yep.
Coles reporting 10 cents. Analysts were looking for a 20-cent per share loss. So this looks like a very large beat here for Coles, swinging from a profit to a loss. That's huge. Sales 3.4 billion. Analysts were looking for 3.3 billion, so a beat there. They also raised their 2025 guidance pretty substantially. Company had been expecting earnings of 50 to 80 cents per share, now up 125 to 145. Analysts are all the way down around 70 cents. So Coles, a strong, I would say really strong quarterly report, really strong guidance here out of KSS. Stock is your big earnings winner today, up almost 30%.
I mean, your retail community, talking the social media, has a love for this stock. It was obviously got the big short squeeze back in July when it went from 10 to 20 in a heartbeat. I don't know if it's doing that again, but they, were trying to GameStop this thing back in July.
Yeah.
I don't think you're going to see that kind of a move here. You've obviously seen a huge move here already this morning on their earnings. The earnings were fine. There's still headwinds here. I mean, they're trying to turn this company around. The earnings were good, but is this the full GameStop turnaround story? I think that kind of remains to be seen. You do have major resistance up here at 20, just psychological resistance.
I've never really worked in a retail store, but one thing they do at Kohl's, I just don't understand. Do you go to Kohl's? Do you have a Kohl's over there, Dennis?
No, we don't.
Brentster, do you ever go there?
Yeah, I go to Kohl's every once in a while.
So you pre-order, right?
Me? Are you
Or do
asking
you
me?
go in there and look around?
I like
buy
going
stuff?
there and look around. Yeah.
Okay. Lisa pre-orders all the time.
Yeah.
All right. And what they do is like they put it in a bin, right?
You just go pick it up from the bin?
Yeah.
Okay.
Yeah.
I haven't heard of this.
Yeah. So, I mean, if you were sneaky, and there's like a couple hundred bins in there. So,
Oh, you think somebody's going to steal your bin?
no, I haven't. I hope I'm not giving anybody ideas or anything, but I don't know what to. But it sure.
They don't check your receipt when you're leaving the store?
Nope.
Like they don't?
Nope.
Just go grab your bin and you're out of there.
Yeah. Yep.
That kind of seems like a little bit too much of the honesty system there.
Yeah. No, I mean, they do know, like, I think you have to get your bin number, like, when you say you're in the store. So, yeah. So I go into my bin or whatever. But anyways, that's my take. Is this a short squeeze? Is this a big move? Is this Kohl's? Is Kohl's
Little bit.
back? Let's hold over $20. When we had that little squeezy moment back in July, we got to 21.39, and was that ever short-lived? So let's see. Let's see if the big boys, the institutions, want to make this a 20 bid. That's what I'm looking at for Kohl's.
I want
KSI.
to do one more Abercrombie and Fitch. Just give us the
Okay.
earnings for this one. This stock has been in the absolute gutter as well. So low bar of low bars, and they're getting over that.
Looks like a solid report. Quarter was for 236 in earnings. Analysts were looking for 216. Sales beating slightly 1.29 billion. Analysts were around 1.28 billion. They also are giving some good 2025 earnings guidance. They raised their earnings guidance from around 10 to 1050 range to 1020 to 1050. They raised the low end, but analysts are down around 10 for the company's 2025 earnings.
Some of these retailers just have ridiculously low PEs. I mean, this is trading like 7 or 8 times earnings. I mean, depending on whether you're pricing the stock, they're gonna make $10 a share. It's pretty incredible. I mean, it closed at like 6.5 times earnings. If they really can hit that $10 target, are they value traps? They've been value traps. I mean, the stocks keep going down. So I don't know. Like, we have such a separation when we look at multiples from sector to sector. Obviously, we have tech stocks, some like Palantir trading 200, 300 times earnings, and you get AMF trading 6 times earnings. I mean, that's just the way this market is. We have it within the automotives. We talked about General Motors forever trading 6, 7 times earnings, and Tesla's 150 times earnings. I mean, so it is about growth potential. It is about like the story. The Abercrombie and Fitch story is ice cold. Does the RIP get sold? I mean, these stocks are dirt cheap. If I was Abercrombie and Fitch and they were going to make that kind of money, I want to keep my stock price up. I'd put a dividend in there because they have no dividend. I'd go out there and say, hey, we're going to pay a $2 or $3 dividend here. And all of a sudden it's got yield and you've got other things. So if I'm management, that's how I would start to think about this as, because investors like to get paid. When they're buying value stocks, they want a nice dividend. And there's no dividend here. And that's maybe why the stock just seemingly can't get any love. Again, maybe with retailers, it's such a cyclical business sometimes. Maybe they're scared to do that.
Sure.
But if I was Abercrombie and Fitch, I'd consider, something like that, or at least some buybacks or something, because if they were going to make $10 a share, the stock price just is not rewarding it at all. I mean, it's up 18% today, so that's nice. I'm skeptical whether it holds, though, just because it seems like every time this thing rallies, it's just another selling opportunity.
It has not traded above the 200-day moving average since early January. You are clearing the 50-day right now. The 200-day was major resistance in August until you took its final leg down. I think it made a new low for the move actually yesterday. So respect your half and whole numbers. Respect the open up $12. I mean, the old, one thing you got to look for is, you open up 12, you go up 12.5, 13, 14. And then you roll over and come back down through the open. But yes, there's overhead supply. But man, I mean, I can't even start figuring major retracements in this thing because it's coming down from what, nearly $200? 196.99. That was the high back in May of 2024.
Let's talk Best Buy earnings.
Pulling up the results right now. Best Buy reporting $1.40 beats by 9 cents. The $1.31 estimate. Sales a nice beat here, about 9.7 billion. Analysts were about 9.6 billion. They also, similar story here to those first 2 earnings reports we did in the retail space, raising guidance. They are now expecting their 2026 adjusted earnings 625 to 635. Analysts are at around 626. The prior guidance range there was 615 to 630, so kind of a modest raise, but a raise nonetheless for Best Buy.
They do have a 5% dividend. That gives you support up price, obviously. And the report was fine here. It just feels like retail stocks just don't get the love. So, if you're doing the math, they make 635, trading 76, trading like 11 or 12 times. So a little bit further up than Abercrombie and Fitch, but still, Long gone are the days where retailers, obviously the seasoned ones, the ones that are cash cows, are commanding 20, 25 times earnings. It's funny how we've just separated like that. So I find it very interesting.
Got a nice pop, but it hasn't held. Got over $78, 78 and change. That is exceeding the 50-day, but you're underneath it now. You also have a daily high. That one day you just actually on Friday, you poked your head to 78.49. That coincides with the pre-market high, and you're $2.50 off it. So the Bulls have got some work to do in Best Buy to get it back above and holding that 50-day moving average.
Pre-market prep, a word from our wonderful sponsor, Hive Digital Technologies, a global leader in green power data centers for Bitcoin mining, high performance computing, and AI, operating nearly half a gigawatt of renewable energy. Hive is on track to capture 3% of the world's Bitcoin production by the end of this year. Joel put the Hive chart up. If you want to take a look there, there's a QR code in the bottom right corner of the screen. You can scan that to get over to Hive's website to learn more about them. There's also a link in the description of this YouTube video. Thanks again to Hive Digital Technologies for sponsoring Pre-Market Prep.
Let's talk crypto for a second here with Bitcoin.
Sure.
Okay.
All right.
I mean, we've talked about, the potential for this market and the Momo stocks to get bids, but I kind of want to see crypto participate. Every time we seem to get a rally, a dead cat bounce, we get knocked right back down. Here we are. You look at the IBIT or Bitcoin futures, whatever you want to look at, but we're giving back, a big part of yesterday's move here again. I don't know what it's going to take for crypto to turn around. We're in crypto winter here. It's been ugly here for now over a month and a half. It's hard because, you can't just go on valuation and say, oh, yeah, the stock's trading 6, 7, 8 times earnings and it's got valuation support. I mean, there's nothing. You're nothing. So it's all about momentum, and it's hard to get that momentum to turn once it's out. As much as, Louis Sykes is on and saying, well, he's waiting for a momentum to start showing up. Well, who's going to be the person to come in and say, hey, this is it. I'm coming in and let's get the momentum started. I mean, that's what crypto needs. But, you have value investors at a certain point in time that come in and do that, and they're not coming to Bitcoin's rescue. So the trend persists. Till you can get up, and reclaim 100,000, it's probably just best to stay away for now.
I want to just bring to attention here something that has happened in the past that we haven't had for a long time. It used to be that Bitcoin was not related to the stock market. There was no correlation. We're talking like, early 2010s, mid 2010s. I said to you yesterday, Dennis, like, I wonder if we're just getting back into this phase where Bitcoin has decoupled from the market. It seems like it's been participating on the downside with the market, but now that we've had some recovery in some of the Momo names, it hasn't participated either. So I'm just wondering if we're sort of going back into that phase where maybe the market doesn't care about Bitcoin and Bitcoin doesn't care about the market.
I think we could eventually get to that. I don't think it has happened yet, because when I look at stocks like Oklo, when I look at stocks like Palantir, when I look at stocks, there's a million Momo trades here that we can look at, the quantum names, for instance. They kind of look like Bitcoin. I mean, yeah, they bounced. Bitcoin did bounce off the lows a little bit too, though. But do these bounces hold? I mean, there's still ugly trends in IONQ. I mean, it was $80 a month ago. It's $46. RGTI was $55, $58. Now it's 25. So, I mean, we can say, yeah, the market's recovered. Well, the S&P's recovered, but the S&P's really never got hit. And it's very diversified with obviously value stocks in there, picking up the slack. Some of the Mag 7 has held up very well. Google's been a monster for S&P. But when you start looking at the momentum names, the ones that have nosebleed valuations, they look very much like Bitcoin. So those stocks are still trading along with it. So I think, eventually we can get to that where crypto is not, leading the charge lower for the momentum names, but I think it's still there. I think that they haven't decoupled yet. So that's the issue if you're trading momentum is, I think if you're in those momentum names, you need crypto to turn.
Yeah, year-end tax selling too. Who knows where that's gonna, come into play, if that's been done or just holding it over into the new year. But wow, covered a lot today. The divergence between Google and Meta. It's Google and Nvidia. Google's kind of paused. It stopped going up, but Nvidia is still going down. So we got some real divergence here in the top components of the S&P. Top 4 are in the red, and then you got the Google, the Meta, and the Broadcom kind of trying to pick up the slack here. So there's rotation going on within the tech sector. We are going to see how that unfolds in today's session. I saw people pop in and say that, thanks for the show. We never ask you to subscribe. If you haven't subscribed to this channel, please subscribe to this channel. And the reason is we are working on bringing more free content to this channel. We got some surprises for you in mid-December and also going into the year. So subscribe, pre-market prep. We're doing all we can for you. Everyone, what is this? Synthetic, man, are we in Wednesday
I don't
now?
know.
We got to be
Day and a half
sometime
off
in
this week,
Wednesday,
so you
right?
figure it out.
All right, folks. Thanks for joining us on Pre-Market Prep.